Hello, and welcome to ESG Talk, your go-to source for insights and advice for leaders in environment, social, and governance. I'm your host, Mandi McReynolds. If you're a dedicated audience listener, you know that we shape our shows based on your feedback. And we are delighted to bring back to you the hottest guest from season 1. Tensie Whelan had the #1 show. If you remember, she is the director of NYU Stern Center for Sustainable Business. Her show in season 1 talked about the ROI of sustainability. Now, she brought with her a friend, a partner, a collaborator, and special guest, Kelly Fisher, head of corporate sustainability at HSBC Bank USA. So we're going to dive in together about their partnerships and the frameworks that they both formed and developed for the apparel, food, and beverage industry with the support from HSBC. So Tensie and Kelly, welcome to the show. We're delighted to have you. So as we kick this off, our audiences might not be familiar with ROSI, and I think that might be an important place to start. Could you give us a little brief explanation around how ROSI works?
Thank you so much, Mandi, and it's a real pleasure to be here with you and with Kelly. Kelly at HSBC is doing some really fascinating work around sustainability, which we'll hear more about. So, to talk a bit about ROSI, the return on sustainability investment, we have developed this methodology because what we see is that there's a strong dialogue, a growing dialogue around whether there is a return on sustainability investment. And we often see companies reporting their financial metrics and their environmental, social, and governance metrics, but not how the two relate. And because they're not looking at how the two relate, they aren't necessarily scaling up sufficiently their investments. They're not improving their decision making related to managing for sustainability risk, or also looking at what are the interesting business opportunities that come from this. So the ROSI methodology has identified 9 mediating factors that drive better performance when you really embed sustainability core to your business strategy. Those range from, more innovation and growth, to operational efficiencies, to employee engagement and retention, to customer loyalty and sales, to risk management, and a variety of other areas. And what we find, we've been working with automotive, as you mentioned, apparel and food and beverage, pharma, utilities, a whole host of different industries. And we find over and over again is that sustainability is actually that next wave of total quality management that is driving better performance in a variety of different ways. And we'll talk about some of those examples together.
I love how you just framed that. I wrote it down, total quality management. What a great key phrase for individuals who are listening to walk away taking into their next boardroom or executive room and to discuss the work this way. Kelly, from my research and understanding, as we've looked into the ROSI model a little bit more with NYU Stern Sustainable Business Area, we found that you at HSBC Bank USA Foundation were one of the first founders of the apparel industry framework and model. Can you unpack that a little bit for our audience today as to what you hope to achieve as you supported this work?
Sure. Well, HSBC has a net zero commitment to be net zero of our own operations by 2030. But the important and challenging part is we've also committed to be net zero of our finance emissions by 2050. So I would say that our commitments, but more importantly, the world doesn't have the time to wait for businesses to start to measure sustainability the same way they measure their performance and their returns. So I was blown away when I met Tensie and saw the ROSI methodology, because I've seen how hard sustainability teams within companies struggle to make the case for how valuable their work is, why they need resources, why they need support. And we're starting to see that change. But in my opinion, if you study climate change, we don't have time to wait. We don't have time for people to wait slowly and get there gradually, right? And the NYU Stern model was the only one we saw that allowed sustainability teams to speak the language of their treasury colleagues. I think for too long, sustainability professionals have walked into a boardroom or C-suite and expected them to enjoy qualitative measurements, right? Storytelling. We can't show another board a polar bear on an ice cap. That works on me, but it's not working on them. We need to speak their language. And I really, really appreciated that Tensie understood that, and her team created this tool that allows our clients to say to their treasury colleagues, here's the return I think we'll get if I can receive resources and support to do these things long term. It's going to pay off in this way. And we all know that the longer term ways that we start to measure companies, the better, right? We need to move away from the quarterly earnings as the only measurement of a company's value. So all of that was so incredibly exciting to us, and why we wanted to support both the apparel study and now the food and beverage one.
Your framework was developed with big apparel brands looking at Elaine Fisher, Reformation, REI. So can you tell us what you have learned from some of these case studies that stand out to you?
Absolutely. And also, I just want to give a shout out to HSBC, who helped us recruit some of those companies, and also held a very cool kind of workshop with apparel companies after we did this work to sort of educate them about it. But I'll give you one example, which is Eileen Fisher. So we looked with Eileen Fisher at circularity. So Eileen Fisher is a women's brand. It tends to be women in my demographic, very classic, very pretty clothes. Um, they put in place a program called Renew, where they give the consumers or customers a coupon to return their gently used clothing. With that gently used clothing, they either upcycle it into felt and then turn it into another product, or they resell the product online or in store. In doing that, they actually found a number of benefits that we monetized for them that they hadn't expected. So one benefit, of course, was the actual sales of the Renew line. It had obviously low cost to them, so they did quite well on the margins. The coupon was the most popular coupon they'd done, so people actually bought additional product with the coupon beyond the price of the coupon. But then what was most interesting is they had struggled to reach a younger demographic. And with this circularity program, they now brought in, with no acquisition cost, a lot of younger women who then will become, consumers or customers for Eileen Fisher over time. And again, they did that through their leadership on circularity, as well as getting a lot of great free media coverage because they were taking leadership here that we also monetized. So all of that came back to about $1.9 million net annually for Eileen Fisher, which is a relatively small privately held company, is actually quite a significant return for them. So that's just to give you one example, and we have many others which people can find on our website.
And by the way, I'll just add, Eileen Fisher is like my version of meeting a rock star. And I met her during New York Climate Week 2022, just a few weeks after she very publicly turned her company over for, and is staying on her foundation. And I went up to her and introduced myself, and we talked, and I mentioned this. And she knew exactly what I was talking about and said to me, thank you, HSBC, for funding that. We were so glad to participate in that. That was so meaningful. It had such a great impact. Very favorable response from her, which I think shows you not only what that Tensie and NYU are onto something with this tool, but how hands-on she was as a leader to our company, that she knew exactly what I was talking about. So a real credit to them, and such a great story.
Kelly, putting on your banker hat, I want you to unpack for us a little bit more. How do you see this changing how banks like HSBC really look at financial decision making?
Well, our global CEO, Noel Quinn, has said one of my favorite quotes publicly about sustainable finance. He said he wants HSBC to be the bank that proves that an ESG balance sheet is a profitable balance sheet. So that's why the work that NYU is doing is so important. And I think all of you at Workiva as well, Mandi, you're doing great work here as well around this, to stop treating it like something nice to have when we have the time and the resources, and instead treat it like a bottom line critical issue. And the examples that Tensie just gave in both food and beverage and apparel show that, right? These aren't being treated like, oh, well, every once in a while when we get a chance, we do something green, we send our people out to plant some trees and a t-shirt. no, this is a business imperative. So while I don't think I have a banker hat because I'm not a banker, I work with some really, really brilliant people who are, and brilliant financial minds who are now coming around to my understanding of climate and ESG, and know that this is not something nice to have, but something that is an imperative for the bank and should be an imperative for everyone.
And I think it only builds relevance, particularly as you look at a global company. If you are looking at regulation within the European market and double materiality and some of those discussions going on, you're absolutely right. We don't have time to wait to speak both languages or bring both impact measurements together. Now, I'm a practical strategist. Anybody who knows me knows that I'm very pragmatic. So, Tensie, let's dig into the research. You came out with 8 key strategic strategies that maybe some of our listeners could start to think about, particularly in the apparel industry as they seek to become more sustainable. Can you walk us through some of those? What are some of those strategies or highlights someone listening should think about?
Absolutely. I'm going to take a step back for a second and sort of say, as you think about your process to understand how you monetize your returns, you start with what are the material ESG issues for your industry and your company? And then you figure out what are the key strategies that you want to put in place to implement against those challenges. And then with those strategies, what are the practices, right? Because the strategy is nice, but it's up there, right? So then now I have to execute. How do I execute? And then it's at the execution level when you have different practices that you're putting in place that you can begin to assess the benefits. Like, is it driving innovation? Is it driving operational efficiency? And then you can figure out a unit of measurement to monetize it. So looking at the apparel sector and their material issues, we identified these 8 strategies that the industry is using, ranging from reducing their chemical impacts, which is a big one, to improving their waste, energy, and water management. Also big, they're a big user of those natural resources and of waste generation. Looking at sourcing sustainably, so good sustainability sourcing strategies, using circularity and innovation, right? So there's waste management, but there's also opportunities for innovation working with your customers to return and reuse clothes, share clothes, et cetera, rent them. And then there's the employee side of things. So both for your own employees and for your supply chain, are you looking at well-being, accidents, impacts in terms of living wage, et cetera. And then finally, sustainable brand communications. How are you engaging with your customers around these topics? Within each of those areas, then we'll look at across the value chain, what are the key practices that you might put in place, right? So in terms of energy management, you might have a goal focused on first, more energy efficiency in your processes. Secondly, moving to renewables where possible. And third, where not possible, purchasing offsets, right? And so looking at those specific practices and where they might drive financial benefit. So as an example, if you reduce your energy use, you're going to be, driving operational efficiencies. You'll have lower cost. So a whole series of different ways that we'll look at all those different strategies and how you can deliver financial returns, which I want to say one other point. You don't always have a net positive return, right? And you still may need to do things that are related to sustainability. But what we see is when you've got, for example, with apparel, 8 different strategies and a variety of different practices, most of them drive financial returns. And if you look at it in the whole, even if some of them require more investment than return, overall, you've got a very positive picture.
Well, I love where you went there too, because it's about that investment that some will have the net positive and some won't. And I think those strategies are really helpful regardless of industry. The example you gave is really cross sector. We did at Workiva our own a free energy audit with our city, made adjustments, saved thousands of dollars simply by changing the way that we did our lighting and heating and cooling piece that came out of the audit. Kelly's shaking her head. Sometimes it's these simple moves that then larger efficiencies might require more capital, and you might phase those in over the course of time in order to gain some of the capital benefit. But like you said, RECs and offsets, that's kind of until you can remove move to renewables until the market has more renewables. It's more that long-term game. So wonderful strategies, no matter the industry you're in, to be thinking about. Now, you've built on this apparel work, and I understand with partnerships with both your organizations, you just made an announcement of a similar framework for the food and beverage industry as well. Tell us more about that partnership.
Well, I think that a lot of the attention right now, understandably, is on oil and gas, energy companies, and coal. And of course, HSBC is focused on that. We came out with an oil and gas policy last year and a coal policy over a year ago. And we are focused on helping our hardest to abate sectors to transition. But we also want to be the bank that's already thinking about the other sectors. The apparel sector, the food and beverage sector are so critical in transitioning, right? And getting to a 1.5 degree world. We're the world's biggest trade bank, so apparel is a huge part of it, as is food and beverage. And I didn't want us to neglect their needs while we're focusing on those hardest to abate sectors. I also just see such passion and such drive to change within our clients in those two sectors that I wanted to try to find tools like Rosie to help them. I love the way Tensie speaks about how practical, how tactile, how hands-on she wants these tools to be. That's exactly what we were looking for, right? So for food and beverage, it's an even more challenging sector in its way than apparel. And Tansi will speak a little bit more about this, but there are huge risks for farmers to move to regenerative or organic or both practices. They often face a valley of death where they suffer quality loss, and they need to know that they either have financial support or that their buyers are going to stick with them through those challenging times, because the buyers themselves want that regenerative outcome at the end. So for a bank, for us to be able to sit in our room with our clients, with their treasury teams, with their sustainability people, with the Rosie tool, and say, look, here are the ways that if you invest in these several things, we're going to see the payoff over a time. And the key question HSBC always asks, and Mandi, you alluded to this, which ones do you not already have the finance or the capital to make happen? Either at your corporate level, or you're asking a lot of these suppliers, how are they going to afford to do that? Do they have the resources they need? So to me, that's where Rosie is just so invaluable. We can sit with them and have those meaningful conversations in a way, again, that puts it in the CFO's language, right? Puts it in this treasury objective language, not subjective. Let's not get heated. Let's treat it the way that successful companies have always treated a balance sheet, and just talk about which ones are going to have the greatest return for your company and for the planet over time. I don't know, Tansi, what else would you add?
Yeah, well, and first of all, I want to say that I so appreciate the way you and HSBC proactively want to help your clients with this transition. I think that's super exciting. And those type of partnerships is where, and collaboration is where I see the more innovative kind of sustainability leaders going. So to support and build on what you're saying about food and beverage, we identified, because it is, as you said, even more complicated than apparel, about 12 different sustainability strategies. So additional ones might be animal welfare, packaging, um, nutrition, right? So a series of additional points, in addition to some of the types of things we talked about for the apparel sector. Climate, I mean, climate is a huge, for agriculture, both climate affects the productivity of both the crops and the people working in the fields. It also, agriculture is a significant contributor to greenhouse gas emissions, right? So you've got double materiality there. So a whole series of strategies, again, across the value chain that we looked at. We are still finalizing the framework and also the case studies, which we'll be releasing. Our goal is the end of April. But we also do have a number of findings already from some of the work. So, for example, to go to your point, Kelly, about farmers, we worked with Cargill to assess the benefit or returns to soy farmers in the Midwest of the United States of regenerative agriculture practices. So two practices in particular, cover crops, so protecting the soil against erosion, and uh, crop rotation, right, to fix nitrogen in the soil, et cetera, and also avoiding too much turnover of the soil. And we worked with soy farmers in a number of big different states, big companies. And what we found is that through the implementation of these practices, they actually were seeing increases in productivity, crop productivity, as well as decreases in input costs. So when you're no longer turning up the soil, you no longer have to use as much fossil fuel. When you're no longer turning up the soil, and when you have cover crops, you no longer need to use as much nitrogen or phosphorus-based fertilizer. Both of those things, by the way, also generate greenhouse gas emissions. You no longer uh, you have better resiliency against extreme weather, such as droughts and floods. So what we saw in that is that you could actually have lower crop insurance premiums because you were more resilient to bad weather. We also saw that you could take your pricing at a higher point when you wanted to, because again, you were a more stable farm. So you were more able to command your own price. We saw that the states were offering subsidies for these types of improvements. So in total, we saw on average about $100 plus per acre of benefit of employing these types of practices, which did not even include payment for ecosystem services like carbon sequestration and reduction of greenhouse gas of nitrogen and phosphorus-based fertilizer, which we believe that these farmers will begin to get those payments in the future. We're already seeing some begin to. And then one final point I would make is that for Cargill, from a financial, now most of the benefit was accruing to the soy farmers, but for Cargill, anytime that extreme weather reduces productivity of farms, Cargill is no longer able to source from that smaller area. They now have to go out more broadly. When they do that, the price for them goes up. So it's in their interest to ensure that their farmers are more resilient so they can continue sourcing from that particular soy shed, as they call it. So that's just to give you an example.
Beautiful example. And as you were talking, I was making notes of colleagues who I was like in the food and beverage industry that I know that I'm like, they need to talk to you because that is an incredible way to do the tick and the talk, the storytelling with the additional piece of the finance as well as the society impact. This time has gone very quickly. So as we wrap up and close out the show, you started really well, Kelly, talking about the urgency of sustainable business practices increasing and how practitioners have to feel that pressure to measure and to report the return on investment with accuracy, transparency, and balancing a new language. And so as we close out the show, Tensie, let's start with you. What is the most pressing takeaway that you would share with business leaders as they think about measuring ESG and reporting on it?
First, don't manage to reporting metrics. Reporting should come last. Start with what's material, what is your key sustainability strategy, and key performance indicators tied to your ROSI, right? So make sure that you're putting in place a way to track the return on the investments you're making around your material sustainability issues that are both managing risk, but also looking at new business opportunities, and then report out to SASB or the other kind of, or now ISSB, other standards. And then I would say as well, in the way that HSBC and others are, partner with your value chain to drive that better financial performance. And again, make sure you track it, report on it, and use it for decision making.
Kelly, as we turn to you and your final closeout question, coming from that bank perspective of HSBC, what do you wish business leaders knew or prioritized?
It's such a great question. I would say that tackling climate change and social inequity should be the job of every single person at a company. I know it sounds crazy, but I'm trying to put myself out of a job. It's been too long that we had this small sustainability team over here, and boards and CEOs said, well, they'll get it done eventually. The urgency is too great, and that will require every single one of us. And my favorite thing, I had a call like this yesterday with one of our clients. My favorite thing is when I speak to a treasury team at a client, not a sustainability team, but a treasury team, and they completely get it. And they're completely bought into, either what they want to do to tackle climate change or what they're trying to do to tackle social inequity. Often it's both now. That's exceptional. And the way that I've seen that change in my 7.5 years at HSBC has been very rapid. It needs to be even quicker, right? So I would say for sustainability practitioners who are listening to this, your work is so important. Demand that it be treated with the respect that every other aspect of your business is treated. And for financial professionals who are listening to this needs to be part of your job. And I know you have hard jobs. We're seeing CFOs have the highest turnover of any job right now, according to recent research that McKinsey shared. But often CFOs are challenged to either think boom times or recession times. You need to be thinking about the ESG times and how that needs to be part of your job and part of the entire C-suite and board. And your banks are here to help you. We want to partner with you. And if you're not thinking about how finance and capital are critical to achieving these huge sustainability commitments that you've made, they are, and you need to tap into them.
Beautiful closeout from both of you. I so resonate with what you both said. And Kelly, particularly as you think about working yourself out of a job, I say the best time I have with clients is when risk, finance, and ESG people all get on the call. Because then I know we're dealing with something very special and they're prepared for the future and they're prepared to invest in the return of their company and society. So I'm 100% with both of you. Just thank you so much for sharing your knowledge, being leaders in the field around partnerships, pilots, and scalability of combining both finance and sustainability together in a shared language. We are all better for your leadership, and thank you. Thank you for joining us for another episode of ESG Talk, brought to you by Workiva, the world's only unifying platform for financial reporting, ESG, audit, and risk. Hey, if you enjoyed this episode, please rate and review us on Apple Podcasts. Subscribe to future episodes on Apple, Spotify, or YouTube. We would love to have you back and share with us your feedback so we can continue to shape episodes just like this one. Thanks so much for joining us, and we'll talk real soon.